Welcome to Biztech's Technology Show, the show where we feature tech companies across Asia talking about their solutions and how they make a difference in the tech landscape. Today we feature Shippit, an e-commerce fulfillment platform. Shippit was founded in Australia in 2014, launched in 2015, and began by working with a handful of fashion and homeware boutiques in Sydney. However, it now powers delivery for hundreds of retailers across Australia and sending thousands of deliveries every single month. Now, since its official launch in Singapore in July 2020, the company has been scaling up in order to capitalize on Southeast Asia's projected $172 billion e-commerce industry. Now, to tell us more about Shippit is Mark Lancaster. He's the Southeast Asian Business Development Lead at Shippit. Now, welcome to the show, Mark.
Brian, great to be here. Great to meet you as well.
Now, Mark, could you start by giving us an overview of Shippit and the history of the company?
Yeah, absolutely. So obviously we started 6 years ago in Australia, and our co-founders, Will and Rob, saw a great opportunity to kind of tackle the fulfillment and last mile delivery challenges. They were tired of missing deliveries, getting carded in their letterboxes and having to kind of chase after parcels. And as online was growing, there was a real need to kind of help e-commerce, help retail to kind of power that piece, improve that last mile experience. You know, our mission at the company is really to revolutionize how you send anything, anywhere, to anybody. And that's obviously a very ambitious, statement, but it will take time, but it's a really kind of important area. You know, people often forget that actually, whilst delivery is maybe not a sexy part of e-commerce, it's fundamentally important to the success of retail e-commerce online.
Now, Mark, you have a very interesting background because you've been involved in e-commerce since the mid-2000s. Tell us about your background in e-commerce. And that was an exciting time in Australia in terms of e-commerce.
Yeah, absolutely. Like, not many people know this, but I obviously was born in the UK and actually wrote my dissertation at university on the impact of the internet on the antiques world. And this was back in 2000. So you can imagine in those days, selling jewelry or furniture online was kind of, very far from what people believed was possible. And, but then I obviously then moved to Australia, and it's an interesting journey because I probably look at it from different angles. I have owned my own online wine business. I have also worked for eBay in Australia for almost 4 years. And I've worked, for global companies like Travelport in the travel space from an online perspective. And it's been really interesting. For me, it's all about passion. I wake up every day and I'm learning something new every day. The markets are changing all the time. And it's just an interesting time because really I've seen so much change in the last 20 years. And I think, when I look at Australia, when I joined eBay quite a long time ago now, it was very much that kind of marketplace, but just trading secondhand items. And I was part of a team that helped kind of bring on retail to change the marketplace perception. You could sell new items and kind of, in fashion, in electronics, in beauty, all of those things. And I think what's sort of interesting with the geography of Australia, like, it was challenging back then because, we weren't that mature in the market, but we were early adopters. But if you can imagine sort of moving large items across the geographics of Australia, incredibly challenging. And often I remember in eBay, sellers would kind of list items, and then ironically they would offer free shipping, but somebody would buy it in the middle of the middle of Northern Territory, and it would become an absolute nightmare to ship that. It would obviously be very costly, so there'd be no margin left for that retailer. And I think, fast forward all those years, we've come so far in just not only customer expectation, but also more tools available for merchants to kind of tackle those pieces around the delivery side of things, but also kind of, the capacity is needed to grow within the network from a delivery perspective, more carriers, more services, more demands. I think the Iconic is a very interesting business in Australia that kind of changed that whole customer piece. And people talk about the Iconic a lot because they were the first ones to do that kind of 2-hour delivery within Sydney in metropolitan areas. But now you've got kind of on-demand deliveries. You've got the likes of Yellow and Ubers, all kind of changing that. And then here in Asia, you've got Grab and other players kind of changing that landscape again. So it's, there's lots going on. The payment space has been revolutionized as well. And I think there's still so much happening though. And I think you can't just sit on your laurels and think it's done and dusted. It's always changing. And I think that's, as I said before, is the thing that keeps it really exciting. So.
Now, could you then tell us, walk us through really what Shippit does?
Yeah, absolutely. So we're really there to obviously improve the ability around logistics and last mile delivery. So really enabling companies we're a SaaS business, enabling companies to transform and improve their workflow efficiency. So everything from receiving that order to obviously processing that order within their warehouse or through their 3PL, and then right through to kind of booking that carrier, and then that end-to-end customer experience from the kind of tracking notification. And we integrate with a number of different carriers. We have about 35 carriers across our network. Majority are in Australia, and really giving customers that ability to access those carriers very easily. And our system has algorithms built in to basically determine what is the best carrier based on your business rules. So for example, like, is cost more important to me? So obviously being able to deliver for the lowest price, or is the ETA and the faster delivery more important? So really kind of, and be able to really improve that end experience for the customer. And what we found is, like, a lot of retailers have looked at different options. So obviously you can integrate with one carrier, but you can imagine now with obviously e-commerce growing so fast, there's capacity constraints on the network. So you're obviously trying to mitigate risk. So if you've got access to multiple carriers, there's less risk to your business. So Shippit kind of enables that. And really, we also, I think a fundamental thing is we help customers with the visibility and the expectations of where their parcel is. And that's really, really important as well.
Now, who do you partner with in Asia in order to make order fulfillment happen? Now, you are currently in Singapore and Malaysia only, correct?
That's correct. Yeah. So we launched here as you mentioned, back in June last year. What actually brought us to this market was we did a deal with Cotton On and Sephora, and that gave us we saw the opportunity to kind of move into this region. So we moved in, we obviously started to we had to build more integrations with various carriers. And so that included obviously SingPost, included Aramex, Ninjavan. And then more recently, we've also integrated with Janio. Q Express goes live this month, and also CJ Sentry from Malaysia. And we have integrations with DHL and FedEx as well. So obviously that's a critical part of the success of our model. The more we integrate, the more carriers we have, the more services we can offer, the more interest there is from various merchants here in the region to obviously utilize our services.
So you mentioned Sephora and Decathlon, and they represent probably large customers on your side, but you've also got small customers, because your plans start as little as 25 Singapore dollars. I think you do 250
that's right.
shipments or something like that. Tell us about your customer base and what it looks like now in Asia.
Yeah, it's really interesting, because actually when I was doing some analysis a couple of weeks ago, we've actually got some of our top merchants using our platform as coffee companies. So the likes of Coleman Coffee Roasters, Calpresso Coffee, number of home ground coffee. And I think it's interesting because obviously Singapore, like Australia, big fans of coffee, love their fresh coffee. And the freshness is the really important part of this, because obviously there's an expectation that you can get that product as quickly to the customer as possible. So Coleman Coffee Roasters, for example, have a very high benchmark of customer satisfaction. And we help them by giving them access to multiple carriers and different services to get that coffee to the end customer. But you're right, it is a broad range. So it's everything from your startups, we've been focused on fashion, beauty and cosmetics, but right up to obviously those larger merchants, in the network. And we're talking to kind of, I think as you get to that larger end, we're talking to some large fashion merchants that have operations all over Asia. That starts to open up more complexity, because they've got operations in multiple markets, they've got warehousing in multiple markets, and they're doing a combination of cross-border, they're bulk shipping items into different markets. So it becomes more challenging on the other end. So our business is actually something for everybody, but we are quite focused on that larger end of the market, just because there's opportunity there and not many people are servicing that end of the market.
And who do you see as your competitors? Because basically you have everything from ShipStation to ShipHero to even Rakuten that's in this business. So how do you compete in this market in Asia?
Yeah, look, I think we see our biggest competitor right now is like easyship. They have a lot of integrations. They have obviously a big range of the customer base, but there's also Easy Parcel, but they're more focused, I would say, on Malaysia, but also more focused on the lower end of the market. The kind of the growing kind of hobbyist scale. But there are international players that are starting to kind of look at this in Southeast Asia in a bigger capacity. I think, sales by 2024 in Asia will be like 65% of the global market. So we know there's huge growth in this market and a lot of people looking at this market, but also it's a challenging market, 11 countries in Southeast Asia and very different socially, very different economically, very different politically, but, obviously a very young population, a growing population that are quite tech savvy and also, have good mobile access to mobile and things. So with a younger population, they're kind of more inclined to kind of obviously buy more. So there's obviously growth opportunities in those areas.
And Mark, what was interesting is I noticed that your plans even accept cash payment. I think I'd be hesitating a guess that basically it's specifically designed to cater for less developed markets in the region, especially geographically isolated areas.
Yeah, absolutely. You're spot on. It's interesting because cash and delivery is not relevant in Australia. In fact, actually, it's moving to an economy that's really cashless. Yeah. And you could say the same about Singapore, but we do have a couple of merchants actually that are used to offering cash and delivery, but it's very much, you're right, targeted to those other markets. Indonesia, 264 million people and 17,000 islands, and obviously a very different geographic and more cash is king sort of scenario. So it's important to do that. But of course, there is the rise of digital wallets, and I think it's still to be determined, like what's going to happen in the future. I think that's a really interesting part is, will you still see cash as king in these markets, or will you see more and more of these digital payment wallets, taking up more and more market share, and then cash starting to disappear in more markets in the future? And if it does happen, it's going to take a bit of time for sure.
Mark, after operating in Australia only for so many years, you've come to Asia, you've been here for about a year. Southeast Asia is obviously much more complicated, as we've just been talking about. But people don't realize Australia is the 10th largest market for e-commerce in the world, 27 billion revenues in 2020. And it's even a bigger market than Indonesia, which more than about 10 times the population. What do you think were the lessons that you learned in this last 12 months that perhaps you've applied from learnings in Australia before?
Yeah, it's a really good question, actually. I think, you're spot on. In Australia, 25 million people, but a huge economy, very mature in terms of online capabilities, and whereas Southeast Asia, 655 million people. But I think big learnings is it's a much more price-sensitive market here in the region. I think also there's obviously more challenges around actually the products. Big difference I notice is that domination of the marketplaces. So for example, in Australia, if you look back a few years ago, you've always had eBay there for quite some time. Amazon only moved into the Australian market about 4 or 5 years ago now. But you've had here in Asia, huge domination by Lazada, the Shoppies of this world, the Tokopedia in Indonesia, which recently merged with Gojek. So I think that's what's quite interesting here. You don't have as many kind of homegrown, kind of direct consumer brands. You have a lot of domination with the marketplaces. And obviously businesses are still trying to grapple with the fact of building capabilities and momentum with their own e-commerce site versus using marketplaces. So there's a big learning, I think, between Australia and obviously Asia in terms of that capacity. From a delivery point of view, obviously it's 30 minutes to drive from coast to coast here in Singapore, and you've got much lower freight cost. The average freight cost is kind of $3.40 here in Singapore for kind of items around the 2 to 3 kilometer. In Australia, that geography is very different. So I think you've got higher margins on the delivery cost, so you can play around with the delivery opportunities in terms of offering free and different services and charging different levels. If I was a consumer, I'd happily pay a premium for a for a premium service, perhaps next day or same day delivery service and those options. I don't see those options much here in Asia. It's very much a free delivery service, or it's if you spend over X amount on your checkout, or it's a flat rate delivery. So I think there's kind of an element.
Isn't that partly also the fact that because there's this hyper competition right now, delivery is seen as a way to basically get market share?
Yeah, I think it absolutely is. I mean, I think you're spot on. It's interesting because so you're seeing also sort of development by some of the key courier companies here. So I was reading an article a couple of weeks ago about the 14 unicorns in Southeast Asia, and one of them, alongside obviously the Grabs and the Travelocas of this world, there was also J&T Express in that. And J&T Express have made a big play in the market recently to obviously win more market share, drive down the price, invest heavily in their technology, in their capabilities from obviously investing in planes, investing in more transport options. And I think what's interesting is it's obviously disrupting the market a bit because the consumer has very high expectations and they don't like paying for shipping. So obviously the other kind of players are obviously, it's a challenge to them because you've got to obviously evolve. There's only such a point where you can get to a low level where something starts to be effective, whether that's customer service or whether that's, ETAs, the delivery. So I think we're still seeing sort of movement in the market that's going to obviously make changes in the coming months for sure.
And how about your business in terms of categories? You started very much fashion orientated in Australia, and Australia, that's 26% of the e-commerce revenue. Personal care is also around 26% as well. But how is the category mix for you so far in Asia?
It's a really interesting point because we're seeing quite similar trends. We've been quite focused on fashion. It's a high item that's highly consumed and bought regularly online. Beauty and cosmetics is also another big one, like you mentioned. But you're also, because of COVID, you're seeing a lot of new categories popping up. The likes of pet food pet category is a big one that's been growing. I think there's also obviously of course the food and beverage because of COVID not being able to access that. But I think that one comes with new challenges because of obviously speed of delivery and certain health and safety requirements. Yeah. But I think shoes is another big one. Some of our clients recently have obviously we're starting to talk to more and more shoe companies. Malaysia Shoes is one of them. So I think there's there are definitely trends, and that's really just in light of just what people buy online. You only buy a sofa once every perhaps 5 years, but you buy clothes regularly, and cosmetics is always that one that ladies actually bought a lot in lockdown last year. I think just because they wanted to feel good because they were stuck at home, and it just purchasing behavior made them feel good. So I think you sort of those trends are kind of very similar to similar markets. But the only other thing I'd probably say is if you couldn't get it here, you're accustomed to buying more online to get those products from overseas. And certainly Singapore, we saw about a 23% increase last year in consumers that had never bought online before that suddenly started buying because they just couldn't get that product because of lockdown or because it wasn't here in this country. So yeah.
So Mark, what sort of turnover are you doing overall and specifically in Asia?
So I can't really, obviously we're a private company and obviously with investors, I can't talk financials, but I can kind of give you some indication on kind of some of our numbers. Okay. So we're doing over 20,000 volume a month here in Asia, and that's in basically less than 12 months of operating. We're actually getting to that point where, interestingly, 2 or 3 days a week, we're doing over 1,500 parcels a day. We're getting close to that 300 merchant baseline here in the market. And we haven't, to be really honest with you, we've been very focused on Singapore. We've done a bit of work in Malaysia, but we're kind of putting a lot of emphasis now on Malaysia. As a company, we, after our funding in December last year as part with Tiger Global, we're obviously investing heavily in this region. So investing in our staff.
So that's the 30, I think you raised the 30 million Australian dollars Series B round.
That's correct. Yes, we did. Yes. So that's enabled us to invest in certain areas to obviously give us that growth. So one of the things we invested in is obviously Southeast Asia, but part of that investment has also been going into our capabilities within the organization. So we invested very heavily in our data capabilities. We use Snowflake as our data lake, and then we use Looker as our data BI tool, and really having all of that data. I know data is a topic that people discuss all the time, but it really gives us the edge because we can actually really start to give merchants the insights they need to make the right business decisions. And that's really helped. It has opened up a lot of interest in Asia because a lot of companies we talk to just haven't got a good grip on what they're spending on their logistics in multiple channels. So I spoke to a large cosmetics company, and they use marketplaces, but they don't have a good understanding with the data coming back of what they're actually spending, on their marketplaces. And so that is actually really important to enable us to obviously help those customers, start to drive down costs, but first of all, at least understand what they're spending and understand how they can kind of, drive the right outcomes for their business in terms of cost reduction, but also efficiency. I'm not sure I answered the full question, but I gave you a few indicators of where we're heading in the business. We've also invested a lot in staffing as well. We're just about to hire Nick. Well, we have a new network operations manager starting next week, who will be very focused on kind of those partnerships with our couriers that are very important to our business. We'll continue to invest in kind of customer success and account management to help our existing customer base. We have quite a large sales team as well, and we leverage off our head office, but obviously engineers and technology to continue to develop our products for this market.
So final question, what's the strategy in terms of geographical strategy in Southeast Asia? Because you're only in, as you said, Singapore primarily, and then a limited way in Malaysia. What's next after this?
We do actually have limited operations in Thailand actually for Sephora. So we are in that market, but we're very much actively looking at, key markets like Indonesia and the Philippines. They come with obviously new challenges. Language is one of them, more so in Indonesia than the Philippines, where a majority of people speak English. But we're kind of evaluating obviously the landscape, the go-to-market approach. A little bit challenging with COVID because you can't just fly in and have some good meetings and talk to people and kind of, get more understanding of that market. But we're doing kind of our due diligence to understand like what's required, who is operating that market, what is kind of required, and where the gaps are, and where we think our business model will fit accordingly. And that's also looking at partnerships potentially and looking at kind of other avenues. I think it's, when we invest in a new market, we take a kind of quite a strategic approach to kind of make sure we do it properly. And there have been past scenarios of companies that have tried to expand really fast and really quickly and have spent a lot of money and just haven't understood the market properly. And I think that's really important because every market, as we've talked about this morning, Australia is very different to Asia. And I think the longer we spend here, the more we test our products and services, the more we actually understand what the merchants require and what the consumers are looking for as well. So it's sort of that B2B 4C ultimately to really understand that you've kind of positioned yourself in the right area for the market.
Now, Mark, thank you very much. It's been a fascinating discussion.
It's really great to meet you. Thanks. And no crazy questions as well. So thank you.
We've been speaking to Mark Lancaster, Southeast Asia Business Development Lead at Shippit on Biztechasia show. I'm Brian Fernandez. This video will be on our Facebook and LinkedIn sites, as well as our website, www.biztech.asia. Please like and subscribe to our various platforms. Thank you very much for tuning in.